A brutal week for big tech. Google slashes 6% of its workforce in the largest round of layoffs in the company's history. This comes after a wave of layoffs earlier this week from Microsoft and Alphabet.
I think that the biggest potential business loser this year is Google Search, as measured by pure profitability and engagement.
In 2020, during the pandemic, big tech companies increased their hiring as there was a surge in demand for online services. But now that demand is down, these companies are responding with massive layoffs. But that's not the whole story. It seems that artificial intelligence may be playing a larger role than anyone is suspecting. In this video, Chamath Palihapitiya is going to talk about the impact AI could have on big tech in 2023. And if you haven't already, be sure to subscribe to the channel to always get the best investments and economic analysis.
I think that the biggest potential business loser this year is Google Search, as measured by pure profitability and engagement. I think it's easier for me to see where the usage comes from, as opposed to picking OpenAI or ChatGPT in terms of where the usage goes to. And the reason is because I think a lot of people don't still fully understand how machine learning and AI work, but just 30-second primer. There's two big buckets of work. There's what's called learning, which is how you learn how to make predictions. And then there's what's called inference, which is when you actually type something into the search box, you get the answer. The thing with learning and what ChatGPT is showing is that they have learned by crawling the entirety of the web. There are 5 or 6 other organizations that are capable of crawling the entire web in terms of cost, in terms of compute, in terms of the quality of the transformers and the quality of the AI. And so I find it easier to predict the decay in the quality of Google Search as that much better than everybody else than I find it is to predict who will win, because I think that with enough time and money, Oracle, Microsoft, Google, the Chinese internet companies can all compete, Facebook. And so I think that you'll converge on the same training, which will lead to the same inference. And so I think consumers end up getting confused and will end up being able to get high quality search results from many places versus today. You would only think that Google is the only game in town, quite honestly, for most people.
Well,
so I think that
the statistics show that. Yeah.
Google could lose 10 or 15% of usage to all these other sites, and that may not make any of those sites that relevant, but it'll have a material, measurable impact to Google.
The tech industry is experiencing rapid changes, and big tech companies are taking measures to protect their business from potential negative impacts. Following the trend of layoffs in the tech industry last year, companies such as Google and Microsoft are now also implementing similar measures. At the World Economic Forum in Davos, Microsoft CEO Satya Nadella acknowledged that the company has been impacted by the current economic climate. As a result, Microsoft has announced plans to lay off 10,000 employees. This decision was revealed in a recent securities filing. Google's parent company, Alphabet, is reportedly laying off 12,000 employees, as industry experts, such as entrepreneur Chamath Palihapitiya, believe that Google may face significant challenges this year due to the emergence of new technologies such as OpenAI's ChatGPT. ChatGPT is a language model AI that can provide answers to almost any query it's given and is seen as a direct threat to Google's search engine. It's therefore no surprise that Microsoft, a company with its own search engine Bing, is showing deep interest in OpenAI. Microsoft is reportedly planning to invest a significant sum of $10 billion into OpenAI, the artificial intelligence research and deployment company. Microsoft already holds a stake in OpenAI, and OpenAI is seeking additional funding from Microsoft. Additionally, it's believed that Microsoft aims to integrate OpenAI's technology, specifically its language model ChatGPT, into the search engine Bing. The details of the deal are still being ironed out. However, it's understood that Microsoft would receive 75% of OpenAI's profits until it recoups the investment. Following this, Microsoft would own 49% of OpenAI, with the remaining 51% being split among other investors and OpenAI's non-profit parent company holding a small 2% stake. This significant investment by Microsoft highlights the growing importance of artificial intelligence and its potential to revolutionize various industries. The partnership between Microsoft and OpenAI could lead to the development of cutting-edge AI technology and its integration into various Microsoft products and services. While Microsoft is looking into the future already, they're also joining the growing number of big tech companies that are laying off their employees. By the end of March, the company would have downsized by about 10,000 staff, making up about 5% of their employees worldwide. This could be indicative of a grim future for workers. Is it possible that big tech companies are actually replacing these workers with AI? As AI machines become more sophisticated, it's not just factory workers and manual laborers who need to be worried. White-collar jobs that were once considered safe, such as many in the technology sector, are now also at risk. So, having a computer science degree might not be enough to protect you from the winds of change. As the saying goes, disruption is the only constant.
I think that if we've learned anything from the last 3 years, you have to separate the valuation of a company and how it performs in the stock market with its value in society. So, for example, if you look at Zoom's valuation has cratered, but its value in society has probably continued to go up. It's still a massively relied upon tool. The point is that markets do not give you credit for the value in society. They will give you credit when you are about to over-earn, but then they'll pull it all back when they think that you're going to under-earn. So in that lens, I think that tech will have a tough year. I think energy will have a really shit year. And probably the biggest asset class that is going to get pressured is going to be junk debt. And the reason is a bunch of these variable rate loans, when rates are at 5 and 6%, that all of a sudden are like 11, 12, 13, 14% coupons, a bunch of companies will have trouble meeting their debt obligations and will have to restructure the debt or will have to file.
The tech industry took a major hit in 2022 as the top 10 tech stocks lost a combined $4.6 trillion in market capitalization. According to a report by Seeking Alpha, Amazon took the biggest hit, losing nearly half its market valuation, or $856 billion, in the last 12 months alone. Alphabet, the parent company of Google, saw the next biggest drop, losing $787 billion in market cap. Apple wasn't far behind, losing $755 billion in market valuation. Microsoft also took a hit, ending the year with a market cap that was $726 billion lower than where it began. This year, we're likely to see more layoffs as the economy remains restrictive and advancements in technology cause a reset in the industry. But what do you guys think? Let me know your thoughts in the comment section below. If you enjoy videos like this, be sure to subscribe and check out our other videos on the channel.